Hello and welcome back to On-Chain Reaction. I'm your host James Bennett and I'm the CEO of ByteTree. ByteTree provide on-chain data for digital asset investors to help them navigate this ecosystem. So this week we're going to start off by looking at price volatility. A couple of weeks ago we spoke about the fact that price volatility was reaching a close to unprecedented level, around 20 to 22%, which for Bitcoin is extraordinarily low. We were calling for a break in either direction, with volatility having been squeezed down at the low end, and we've seen that this week with a break up towards $13,500 at the time of recording, Wednesday the 28th of October around lunchtime. So with that sort of break to the upside, volatility has returned. We've jumped from around 22% up to close to 31%, and we expect this to continue as there's quite a lot of price action ongoing today. Okay, so now moving on to our first on-chain indicator. This is a simple one. We're looking at the total value of transactions settled on the Bitcoin network over the last 7 days. So a 7-day moving average of transaction value. And we can see those bars along the bottom there. And then that light blue line is the 7-day moving average of those bars. Transaction value has picked up sharply along with the increase in price volatility that we've seen, and as a response to increased price action. So transaction value has been pretty flat the last few months, but is peaking again as it did in August and in May, both times of heightened volatility and price action. Okay, so often we like to comment here on the miners. So on this third slide, we're looking at the miners' revenue streams. So recall that the revenues for miners are made up of the new coins generated and the transaction fees. This week we've seen fees surge to 24% of total miner revenues, which is the highest we've seen in the whole of 2020. That's essentially, that's around $12 million per day in fees, and it shows that really there is a lot of competition for block space at the moment, as there are simply more transactions than there is space for blocks. Now, why is that the case? Well, moving on to the next slide, we can see that miners are struggling with the new all-time highs that difficulty is currently at. So the blue line there shows you the average block time. The dotted line that's running horizontally across the screen is what the sort of base case should be. So a block comes every 10 minutes. When that blue line is above that base case of 10 minutes, it means that blocks are taking longer than 10 minutes to arrive. And just think about it, if there's less trains leaving the station but there's the same amount of people, then you're going to have a lot of crushing and squishing in order to get on those trains. If there was a payment mechanism, I expect people would be prepared to pay more in order to get that space. It's the same thing with the Bitcoin network. We're seeing fewer trains leaving, and in fact we're seeing a higher number of transactions as well. So you've got that real competition for space. The other thing that you can see on this chart here is that difficulty is at all-time high, as I just touched on, but that we are very much likely to see a big correction downwards in the next few days, which is the next difficulty retargeting. The two peaks that you see there before in April and around June of this year, both times that block times went above 10 minutes, so you see those peaks at the top. The reaction was that we saw a significant drop in difficulty, and you can see that on the stepped grey line along the bottom half of that chart. So expect a difficulty adjustment incoming as a result of this increased times between blocks. Okay, so on to the next chart here. We can see that miners have been heavily offloading the newly minted coins into this strong market bid. So we've seen price rise over the last 7 days by about 14%. From just shy of $12,000 to $13,500, and miners' response has been to sell their excess inventory. So contrary to popular beliefs or perhaps expectations, miners aren't just selling their Bitcoin in order to cover their operating costs. We actually see miners as very strategic market participants who sell when the market bid is strong, and when the market bid is weak, they actually tend to hold back on selling. They know that the market can't hold it and that it will likely just crash the price further. So we can see, in reaction to the strongest price action that we've seen all year, miners have reached a new high for the year in the rate that they are sending or spending their newly minted coins. Okay, so now moving away from miners and onto one of our favorite valuation metrics, which is the NVT. That's the network value to transaction ratio. If you want more information on this, you can find it in the ByteTree glossary, and there's various blog articles you can read more about it there. But essentially what it is a price to sales ratio for the Bitcoin network. So we look at the amount of transaction activity that's going across the network relative to the total value or market capitalization of the network. Bitcoin doesn't have a cash flow or traditional earnings, but it does have a sort of value transfer mechanism, and it does of course have a market cap. So the NVT is what we use to show relative valuation. We don't have an absolute number of what should NVT be, in the same way that price to earnings can escalate significantly depending on the company and the sort of bullish or bearish sentiment that's currently in the market. But we've typically seen that an NVT measured over a 5-week period that's above 12 is historically very high and overvalued, and Bitcoin doesn't like to spend much time at that level. Similarly, we use a derivation of the NVT in a fair value metric that we've computed at ByteTree. And the NVT that we use there is currently giving us a fair value of Bitcoin of around $8,400, which puts us at about a 61% premium. Now that does sound very high, and again, Bitcoin, although we're on a positive move right now, we are slightly wary that we're getting a bit ahead of the current sort of fundamental demand, and we would expect to see some retracement in the next couple of days. With that said, overall sentiment very positive in the market. There's a lot of growth. We're seeing new highs in number of addresses using the market, and we're also seeing transaction value across the board pick up. A lot of new participants entering into the market too. So, we're very excited about the coming weeks.